So much of the news and the media when it comes to real estate investment always ends up speaking about condos in Toronto. Over the last 2 decades, really, that's been a center of speculation, not only in Toronto and the GTA, but in Canada for real estate. And the last couple of years have not been good for Toronto condos. Sales have dropped, sale prices have dropped, developers have delayed projects. It's not looking good. But 2025 is a new year. The economy is turning. The real estate market pendulum is swinging towards the buyer. Things are getting better. But does that mean 2025 will be good? Will it bust or will it boom for Toronto condos? We're going to find out deep into the data right now. First piece of data I want to review is average rents. And this is where the news and general theorists cry all the time about rents decreasing. And they're not wrong. Rents have decreased over the past year and a half to 2 years. But let's take a deeper look into the data. From 2020 to 2021, we saw a 4.5% increase. And from 2021 to 2022, we saw almost a 30% increase in average rents between the condos completed in the years 2020 to 2025. In 2023, we saw another gain of 7%. So you could say from 2021 to 2023, that's a 37% gain in average rents. And in 2024, yes, average rents dropped 2%. So you're talking in 2 years, a gain of 37, in 1 year, a drop of 2. So in the last few years, have you been doing well in rents? Yes. Is the condo rental market going to drop off the face of the earth? No. And as you can see, across all categories, even older condos, the rent drop-offs are minimal, 2%, 3.7, 2.8. Some have even gained -5%. So it's not the end of the world. These units will still rent. Will you cash flow? I don't know about that. I don't know if you cash flow from the beginning with maintenance fees and prices, etc., but they will rent. The second major factor here is pricing. We all want to know, are we getting a good deal? Are we paying too much? Are we paying too little? So let's look deep into the data all the way back to COVID times and see what happened. Toronto new condo prices have fallen $165 per square foot from the market peak. That's not a surprise. Let's look at 2022. The average price hit a peak of $1,689 per square foot. And in 2024, at the end of 2024, they were selling at $1,524 a square foot. You can see the massive jumps in 2022, a smaller jumps at the end of 22 and into 2023, and then a steady and small decline since. Now, does that make the condos become a boom? Is it make it become a bust? I think with better affordability coming, with mortgage, lower rates coming down, this is an opportunity for first-time home buyers to now enter the condo market in the cheaper price categories. You can get in the market at the best prices we've seen in almost 5 years with the lowest rates we've seen in the past 3 years. For investors and for everyone else, is it an opportunity? I don't think so. And is it going to bring the condo market back to where it was in 21 and 22? I don't think so either. Not enough. Developers are going to have to incentivize sales to keep this train going. Let's keep going. What is the most popular type of condo purchased on the market? That's a one bedroom. Let's look at the pricing here and dive much deeper into the data. You can see in 2020, the average median price was $1,222 a square foot, up to $1,281. In 2022, a massive jump up to $1,500 a square foot. And in 2024, it fell to $1,399 a square foot. What's good about this is that we are still up from 2020 and 2021, but down from 2022. Again, does this mean boom or bust? No, it just means prices are starting to regulate. I think the condo market, the pendulum hasn't finished swinging yet. There's still incentives to be had from developers. Prices still may come down before we see a bottom. The only opportunity there is for first-time home buyers. Investors should stop and look at single family, multifamily for much better returns. Every bank, every economist, CMHC, StatsCan, Bloomberg, everyone is hinting at single family and single family type assets, detached assets, doing much better than the condo market. So is it a boom? Hell no. Is it a bust? For most, yes, except for first-time home buyers. To finish off this explanation, We're going to do a quick comparison of two properties that are the same price. One is a condo, one is a detached duplex. Let's analyze which one is actually going to do better in the marketplace in the next few years. Let's look at this condo, 699, 900 in Toronto, waterfront community on the Queens Quay, a spectacular location. Nothing wrong with the location at all. Let's see a few pictures. Let me make my pretty face smaller there. Newer kitchen, little dining area, bedrooms, two bedrooms, nice washroom, looking at the water, downtown, walkable, excellent. What is this unit going to rent for? Probably in the 33 to 3600 a month plus utility range. However, we need to understand that the maintenance fees, are in the $645 range, meaning the landlord is going to have to cover this $645 fee, even though tenants are paying. So you could say, even say $3,500 a month, landlord pays $650 a month in maintenance fees, tenants pays the utilities, landlord pays the taxes and insurance. So is it going to cash flow? Highly doubted, even though it's a nice asset. Let's look at a comparison now, mind you, this is a different area, but provides different benefits. 699 900. This is a two-unit property in St. Catharines. Fantastic north end location. Let's just look at a few pictures quickly so we have an idea of what's going on here. Brand new kitchen upstairs. Big bedrooms, two bath upstairs. Okay. Detached garage, side entrance. Nice kitchen in the basement, two bedroom, two bath, full laundry in the basement. Upstairs has a deck, backyard, the whole shebang, and room for expansion on the side. Now, I think these are very comparable. One, because of their price point, but two, because it's going to cost you the same down payment to get this type of property, but the returns are much different. That condo is going to rent for $3,500. This baby is going to rent for somewhere in the 4,000 range when you factor in the duplex. Okay, you're talking somewhere in the 22 to 2,300 up top and 16 to 1,700 for the basement. Plus, you have the ability to rent the garage for a couple $100, and you have room to expand and add another unit in the side yard, all for the same money. Now, if you're working in Toronto and you live downtown, you're gonna say, why the hell would I want to buy a property in St. Catharines? I don't want to live there. St. Catharines is too far. I need to work in Toronto. Yeah, sure. I suggest this is where the unconventional thinking comes in that makes you money. Work downtown. Continue to stay downtown, live downtown, have your friends downtown, your girlfriend, your boyfriend, all the activities, sports teams, but rent. Own outside of the city where you can cash flow and sustain yourself. The smart idea is to buy a property like this, sustain yourself, cash flow very well, have a solid investment, and rent downtown because you're probably not going to live downtown forever. If you plan on having a family, getting married, chances are you're moving out of the city. You still don't have to move to St. Catharines, but the idea is you have an asset that cash flows that you can leverage down the road. Okay, that is smart investing, and that's what you should do. So will condos boom or bust? I say bust for 2025. Focus on single family assets. Talk soon.